Hello, subscribers. Today is Friday, March 10th, 2023, and this is a market recap for MasterChartsTrading.com. Uh, I You can hear the microphone is different this time. I apologize for this. There's not much I can do at this point, so let's just go with the flow. Your likes is what keeps the channel going. Please don't forget to hit the like button, subscribe to the channel, and share this video. Stocks are indeed in danger as they break key support. This happened on a Friday. Additionally, that's not a good sign. Interest rates to keep moving lower as it was predicted a little bit a while back. And gold flashes a buy signal. This video will be relatively short. If you need to hear what I have to say about all of these various stocks, like for example, natural gas, Bitcoin, Ethereum, and a whole bunch of various stocks like Caterpillar, Costco, Delta Airlines, Alibaba, and many of the gold-related ones like Royal Gold, then please sign up at MasterChartsTrading.com. You can also follow the link in the video on the bottom of this video, in the description of this video. Let's get to it. S&P 500 is indeed in danger right now. So if you listen to my previous videos, I have mentioned that this candlestick, this attempt at a breakout on Thursday, the 2nd of February, where I'm hovering, above this blue support resistance line. Now, these lines are my proprietary. You can find out more about them by going to the description. And you can have them the same lines on your chart. This breakout so far has failed on 2nd of February. However, if we add the dividends into the equation, so we can see this is S&P 500 ETF SPY, if we add the dividends into the equation, then this breakout is still valid on 2nd of February. You can see a close above this blue support resistance line. To me, this means a breakout, another new bull market. Now, right now, S&P 500 has dropped back below this red line. So, if we go with this, the ETF SPY, then this is just caution. We can put caution. Okay. But if we don't add the dividends in, if we subtract the dividends out, take them out, then this today is a signal to sell short. Okay, this is a signal. Okay, and this is a signal after a recent failure. So it's very difficult. I'm not gonna sugarcoat it. We can project the indicators into the future. I already mentioned this, that you can see that the indicators are kind of curving down. And I started mentioning this even back in the beginning of February. They were curving down into late April, so the bottom will come sometime in late April. So what this means to me is that we're most likely going to continue trading more or less sideways without any decisive breakdown. However, unfortunately, we also are getting super close to bearish levels, and um, even if we let's say this is a valid breakout here on the 2nd of February. Let's say that this is a valid breakout. That means we're still right now in caution phase. Okay, uh, but however, if we continue lower and break below this yellow line at currently at 3691, then it is unequivocally going to begin another bear market, I guess is the way to say it. So um, either case, the news this week is not great. We can look at it as being in caution, or we can look at it as being about to approach the new bear market lows. So that means that we could collapse below this October 2022 lows and continue lower. I am, really hoping that we won't do that, and we will kind of bottom out where I'm expecting here in late April. But we need to keep our minds open, and it's possible that this breakout that may have occurred on 2nd of February will be negated. Okay, so this is something to keep in mind. That's why we have stops. Looking at Dow Jones broke out into a new bull market. That's why I was much more optimistic about stocks up until relatively recently. It broke out here in November of last year. You can see up arrows, meaning that we're thinking about buying. These are bullish signals. We want to be buying this. Um, because of the correlations between the various stock funds, Dow Jones is doing pretty much the same thing as S&P 500, but it is much stronger. You can see we're still well above the red line. In fact, we just had another buy signal for Dow Jones. Nasdaq never truly even approached bullish levels. Bullish levels for Nasdaq is where I'm hovering at the blue line at 13,474. We didn't actually get there, and right now we're again, we're getting a signal to sell short. If anything, this is not a great sign. I'm not gonna lie to you. So unfortunately, this doesn't look good right now. Fingers crossed we will just stop falling and rally, but we need to keep our minds open to the possibility that this whole breakout is just not going to materialize. This is a Russell 2000 Small Caps Index broke out into a new bull trend. I was very optimistic at the beginning of February. Notice what happened. Again, we're seeing this. I mean, this is a technically a bullish security, a security in an uptrend that has closed below this red line, meaning that it is now in caution phase. You see, but notice how close we are already um, to bearish levels. Bearish levels are at 1723. It's like not even a percent away. You see. Um, it's like maybe a little bit more than 2.5 to 3% away. That means that another part of the market could easily re-enter a bear market downtrend very easily. It's so close. So once again, this is not a good sign. We will just keep an optimistic outlook until it is no longer feasible, and then once it's no longer feasible, we will reverse our thinking. Junk debt, high yield bonds. Also, I was very optimistic once again in early February here, 2nd of February, 1st of February. There's the breakout into a new uptrend for the high yield bonds. I worry about high yield bonds in relationship to stocks, is because high yield bonds also um, correlate highly to stocks, and as a result, if stocks and bonds are moving together in lockstep, then we can kind of see correlate them. We can see which one is leading the other. So in this case, uh, junk that actually was leading the stocks higher, and uh, you know on this chart right there on February 21st, we touched this red sword resistance line, which means caution, and then rallied. So we're looks like we're going to touch that line again in the not so distant future. Projecting the indicators into the future, we can also see that the bottom doesn't come until late April for the indicators. That means that, again, my interpretation of the situation with the stock market and worldwide, because once again, I think the war in Ukraine is having an effect on this, even though it's possibly not very obvious right now. However, the war in Ukraine is having an effect on the stock market, and I think the more Putin is I guess loses power, loses support, then the better it is for the market. But right now we're witnessing the opposite. Looks like the Russian. There's a possibility that the Russians are gaining the upper hand. I would be very happy if this reverses very soon, but we'll see. So once again, this is a conjecture. This is possibly what I want to hear, maybe. But the popularity of Putin hit a new low. Let me show it to you. back in right there. I'm gonna show it to you on October 3rd. Okay, this was the last numbers I have, and then since then I need to double check again where the numbers are, but it doesn't look good right now, and we are approaching bearish levels. So yeah. However, if we look on some things that are actually going up, and that is treasury bonds. So this is TLT, Treasury Bond Fund, made a new low back here in October of last year, and then has been rising in this wave-like pattern. A few weeks ago, on March 2nd, right there, I pointed out the fact that treasury bonds have touched this yellow support resistance line, and then I said that we're most likely going to rally. We did just that. In fact, today, on Friday, we gapped and then ran higher, close to 3.5% for TLT, Treasury Bond Fund. The opposite is true for TYX, Treasury yield, a long dated Treasury yield, 30-year yield. I pointed out this right there, resistance on Thursday, the 2nd of March. Indeed, we saw exactly that. I'm not making it up. So, right there, excuse me, is the where the resistance came in, and then we moved lower. We can also project the indicators into the future. This is the reason why I was saying this whole thing is that the indicators were curving up. That means that for the treasury bond yield, yield moves opposite to bonds. So treasury bond yield is moving lower, means bonds are gaining in price. Um, I think Federal Reserve has blinked, and treasury bonds yields are going to come down. This possibly is an opportunity to buy treasury bonds, TLT, and other um, treasury bond instruments. They are quite oversold, still somewhat oversold. Looking at the dollar index DXY, so notice this thin white line. I'm going to turn off the indicators for a second. I'm going to turn off the price action, and I'm just going to show you this line, which I drew in um, what do you call it? I drew it in on Monday, the 30th of January. So right there, we're basically following what my prediction was precisely, weirdly enough. But how did I come up with that prediction? Is that I used my indicators. So once again, those are the indicators. Um, I saw the way the price came down right there on Thursday, the 12th of January. This was the beginning of a downtrend for the dollar. And then definitely it was oversold at the time. We rallied. So prediction started right there, 30th of January. We rallied right around the red line. We continue doing this. We can project the indicators into the future. You can see the rally, or the top of this line is once again in April of this year. So we're looking next few weeks is going to be very volatile and very nerve-wracking. I'm not gonna, again, sugarcoat it. It's going to be a tough few weeks. People will pull out their hair most likely because the markets would be extremely frustrating. I think next few weeks. So yes, dollar is pulling back, but I think it's in a downtrend. The reason being is because of gold. I'm looking at gold here. This is another signal to buy gold. Okay, right there. Today on Friday. March 10th. This was an opportunity to buy gold yet again. I think gold is headed higher. However, in the short term, there could be still back and forth. So you can see this sort of faint line. I'm clicking on it right now with the circles. So I predicted that we're going to fall. I just didn't know when we're going to fall. We pretty much followed the curve of my prediction pretty much exactly. We're rallying now. And I think we will continue. We might trade sideways up until like mid-April, but I think the bigger direction is up for gold. And this is again because dollar is dropping, and by extension, gold is taking advantage of this fact. Okay, natural gas will be covered in the members only video. So if you're not a member yet, head over to MasterChartsTrading.com and sign up for one of the products. You can also follow the link in the description and sign up for the indicators and for my newsletters. You get daily alerts about the various stocks and the indicators. You can use them to trade pretty much anything under the sun. These are these lines on the chart, this green, blue, red, and yellow line. They will simplify your trading life greatly. All right, please don't forget to hit the like button once again, subscribe to this channel, and share this video. Thank you for watching, and have another great trading week.